Yesterday, the Bank of Canada announced a second consecutive jumbo-sized interest rate cut, 50 basis points. And bank officials pointed to slowing economic growth, a rising rate of unemployment in the country as reasons for the big rate cuts. But our next guest agrees with the recent views of a former governor of the Bank of Canada, Stephen Poloz. Poloz said recently that if you look at per capita economic activity in Canada, the country is already in a recession. That's one reason our next guest has largely exited Canadian positions in his client portfolios. Let's welcome our first guest of the morning. He's Lyle Stein, president of Forvest Global Wealth Management. Lyle, great to see you. Thanks for coming in. Good morning, Paul. What is your take on the Canadian economy at this point? The bank obviously cut rates by 50 basis points. The reason a bank does that is because the economic picture is sluggish.
Exactly. And Macklem's comments suggested now they're going to be more data dependent. We're going to slow down the massive cuts. But the reality is our economy is losing momentum. What is it? Our finance minister calls it a vibe session. I mean, that's just another name for what I think Mr. Poloz was correct at. Our GDP per person continues to slip. Now, if immigration slows, it may not fall as fast. But the reality is we are facing headwinds, not just in the momentum behind us, but going forward. You think of Mr. Trump's tariffs. Mm-hmm. To me, one of the bigger concerns I have is that if Mr. Trump is correct in his looking to remove many of the illegal migrants from the U.S., how many come to Canada? Are we prepared to handle them? I don't think so. You look this morning at the Financial Times of London was talking about NATO requiring people to get to 3% of their budgets for defense. We're at 1.5%. We're like the poor sister on the 23, 24 country table. Where is this money going to come from? We have governments that are somewhat out of control. They know how to spend, but they sure don't know how to allocate those resources appropriately.
Do you think we'll see more of that on Monday when we get the fall economic update from the government? The government already seems to be, if you read between the lines in some of the stories that are being written in the news media, softening people up for yet another step back on the deficit, for instance. It's a question of which guardrails are going to be blown through this time.
Well, I think we're going to blow through those deficit guardrails. I mean, and they're giving everybody the GST credit starting Monday. And, is that going to carry on for only 2 months, or will they carry it on thereafter? They're bribing us with our money is kind of the reality of it. And unfortunately, they're bribing us with our children's money, and these deficits are not going to be helpful for our kids because they have to be financed at rates of interest that are not anywhere near they were at the bottom when we saw, the close to 0% back in the middle of the pandemic.
So what has it meant to your portfolio choices on behalf of your clients? You serve high net worth individuals, and many of them are outside this country. Is that correct?
The portfolio is Forvest is a global, consider us a multifamily office type of company dealing with global clients, looking to allocate capital all around the world. What we're doing in Canada, though, for our Canadian clients is saying, in this environment, the one thing we do have is good income coming from our dividend-paying stocks. But we're not emphasizing the dividend-paying stocks that have operations solely in Canada. So we've talked a bunch. The banks, we are dramatically underweight in the Canadian banks. And frankly, I can't see a good reason to, buy them at this point. That takes out a big chunk of our market. Yeah. Canadian telecom companies. We don't own a Canadian telecom company. We own a bank. We go to the U.S. We're going to look to the U.S. We do own Canadian resource stocks for their dividends.
Right.
We win when the dollar goes down in Canada because our cost base is lower.
And also we sell our resources, certainly our oil and gas, largely to the United States, where the economic picture is a lot different. Is that part of your thinking as well?
Exactly. Or look at our pipeline companies. I mean, they're moving North American energy. They're just not moving electrons amongst the province of Ontario or the province of BC. It's those kinds of investments that we really want to focus on. And then look around the world. But when you look around the world, it's tough too. Looking around the world, today, we've had 2 interest rate cuts, a bit of a surprise in Switzerland where they've taken the rate to 0.5%. ECB just cut by 25 beeps.
This morning.
Rates are going down all around the world. What is that telling us?
What is it telling us?
It's telling us that things are slowing down, that and government deficits. Again, it's not just Canada that's falling short on NATO, it's the Europeans. And you've got Donald Trump there with the big bully stick beating people into submission. I hate to say it. Everybody's kowtowing to the president-elect.
how Brazil recently raised interest rates. Now, I know Brazil is not a developed market economy; it's an outlier. But you see no possibility of flare-ups in inflation in some of these economies, do you?
Well, that's the tough part. No. I mean, right now the answer is no, and interest rates are now falling to levels of inflation. But the Swiss took their central bank rate below the level of inflation. Are we going to see negative real rates again? Are we going to punish savers again? And I think, that's setting up a very interesting world where do savers go to protect their money against inflation at a time when inflation is not falling the way it has. The numbers that came out of the U.S. yesterday are showing it kind of stagnating at the 2.5 to 3.3% range, depending on the number you pick. It's not aggressively falling the way it has been from the 8% levels that we were printing 2 years ago. Then the next step is, does it recover? There's an interesting article in the Wall Street Journal this week where it showed what happened in the 70s, where we had a decline and then a ramp up in inflation, and wage settlements are coming in quite high. So the seeds are there for more inflation. And frankly, central banks need a little bit of inflation to get the game going again.